A majority of Filipinos still do not have bank accounts as of 2017. That is according to the latest Financial Inclusion Survey. For some insights on this report, Business World's Melissa Lopez comes to us live from Quezon City. Mel, notwithstanding the fact that most Filipinos do not have bank accounts, there is, we understand, an uptick in the number of Filipinos saving their money. What does this all mean?
Yes, Robbie, the latest central bank survey showed that 48% of Filipinos actually have savings. That improved from 43% when the survey was first conducted in 2015. But of that number, only 9% of Filipinos said they kept their savings with the banks, and 1/3 said they still keep their extra money at home. It leaves 15.8 million Filipinos with actual formal accounts with banks and similar financial institutions, but leaves some over 50 million Filipinos still without any account of some sort. That means they keep their money at home or resort to informal sources for lending. Either they borrow extra money from their friends, from their family, or even from loan sharks when the going gets tough.
Okay, so it's grown, the number has grown, but we still have a majority of Filipinos who do not have bank accounts. What's keeping them from opening accounts? What's the barrier there?
Well, the Bangko Sentral survey resulted in several reasons, the biggest of which most Filipinos say that they don't have enough money to make the deposits for the account. As we know, most banks set a minimum required maintaining balance in order to keep their accounts active. That's around a few thousands of pesos. And that isn't a luxury for most households, especially those in the lower income segment. Other reasons cited were some Filipinos think they don't need a bank account. Some do not know how to open one, while others do not have the documents or the IDs required by banks in order to open an account.
Okay, now we're talking about savings. We imagine that for the majority of Filipinos, therefore, especially the unbanked, we imagine that most of them are saving cash, literally holding physical money. In the meantime, our economy, just like everybody else, is trying to move to a digital economy. If they don't have bank accounts beyond their own interest, what does this mean for the digital economy that we're trying to move to? What does this mean for limitations in e-commerce, in e-payments, fintech, and so on?
Actually, the Bangko Sentral is very keen on promoting digital transactions because it promotes a faster movement of money and access to money. So they have pioneered its national retail payment system, where they want to bring the share of online financial transactions from a measly 1% share in 2013 to 20% by 2020. The central bank thinks we are ready for it because we have a young and tech-savvy population with access to smartphones and mobile internet. So it's actually the way to go as far as the Bangko Sentral is concerned.
Okay, Mel Lopez joining us from the Business World News Center in Quezon City.